Gold traders, welcome to the live update, and let me take you straight into the heart of the XAU USD movement today, because the market is firing signals from every direction, and gold is responding with intensity as price hovers inside a critical zone where buyers and sellers are battling for control. And right now, the entire structure is telling us that gold is preparing for a decisive move as volatility compresses, liquidity builds, and the market waits for the next catalyst to explode direction, either up or down. And when we look at today's behavior, the first thing we notice is how gold reacted during the early session, tapping into a key liquidity zone, sweeping short-term stops, and then pulling back with controlled momentum, which shows that smart money is active and hunting levels with precision, not randomness. What's happening right now is a perfect example of intraday manipulation where gold fakes weakness, grabs liquidity beneath a minor support, and then stabilizes to see how traders react. And this stabilization phase is extremely important because it shows whether buyers are willing to defend the zone or whether sellers are waiting for a deeper discount. The candles today are telling a story of hesitation mixed with pressure as wicks appear on both sides, signaling absorption from institutions. And the market is now sitting at a pivot where a breakout could come at any moment. The dollar today is not giving a clear direction, which adds even more tension because gold thrives on uncertainty and with mixed sentiment from global markets, stock indices jumping up and down, oil fluctuating, and risk sentiment shifting hour by hour. The gold chart is behaving like a compressed spring, storing energy, waiting to release it in one violent move. If buyers step in, the path upward today becomes extremely clean because liquidity sits right above the most recent swing, and a breakout through that level would trigger a chain reaction of stop-loss hits, buy-side liquidity grabs, and momentum candles firing upward. But if sellers defend this zone, gold could slide into a deeper intraday correction, tapping the lower liquidity pool before reversing again. This type of indecision is exactly what creates opportunity because today's candles reveal that institutions are setting traps, pushing price into zones where emotional traders react instantly, while the real move is being prepared quietly beneath the surface. Fundamentally, the market is also tense today. Speech rumors, data reactions, and whispers from financial analysts have created a nervous environment, and gold responds to that fear with sharper spikes, sudden wicks, and unexpected direction changes. Today's live energy is a mix of technical pressure and fundamental uncertainty, and that combination always leads to explosive volatility. You can literally see how gold is breathing, expanding, contracting, absorbing, rejecting, and every movement today is a hint toward the coming breakout. What we're watching right now is not just price, it's intention, and the intention behind today's gold behavior is clear. The market is preparing for expansion, whether that expansion fires upward toward resistance or downward toward deeper support. The key is that the buildup is almost complete. Pay attention to the reaction around today's intraday midpoint, because that is the control zone where gold decides its direction. If buyers take the midpoint and hold, we see bullish continuation. If sellers reclaim it, the downside becomes more likely. And remember, today's gold script is not just about numbers, it's about reading the psychology of the market. And today the psychology is restless, cautious, and explosive. Gold is waiting for someone to blink first, buyers or sellers, and the moment one side loses grip, this market will move with speed. Stay ready because today's live chart is about to give you a moment where everything becomes clear. And when that moment comes, the breakout will not wait for anyone. Gold. Traders, listen carefully because the market today is not moving randomly. It is responding to pressure points that are stacking on top of each other. And if you understand how gold behaves under mixed momentum, uncertainty, and liquidity pivots, you can catch moves before the crowd even realizes what happened. And that is exactly what today's live XAU USD action is showing us as price keeps vibrating between intraday supply and demand zones like a heartbeat under stress, but not collapsing, not breaking, simply waiting for that catalyst that forces the next big decision, whether it's a breakout continuation or a liquidity trap reversal. And the reason this zone is so important is because gold is sitting at the intersection of safe haven demand and short-term profit taking, which automatically makes this session more volatile than usual. Now, when we zoom into the 15 millions and 1 hour chart, the story becomes even clearer because gold keeps rejecting the upper resistance wick, around the psychological barrier that traders have been watching for the past 2 days, but every rejection is weaker than the previous one, meaning sellers are pushing but without the same aggression, giving buyers the signal that momentum could shift rapidly if a clean candle closes above that resistance with volume. And at the same time, the dollar index on the other side is showing hesitation, not strength, not a sharp push, just hesitation, which in gold terms means uncertainty rather than dominance. And uncertainty always benefits XAU USD because whenever investors get confused about the USD direction, they take partial shelter in gold. And that creates micro pumps inside the chart, the exact ones we are witnessing today. Now let's talk structure because structure is king in gold trading. And the structure right now is printing higher lows, meaning buyers are defending the same demand area again and again, almost like a wall that refuses to break. And when a demand zone holds repeatedly without deeper pullbacks, it is usually a sign that smart money is accumulating positions in silence, absorbing liquidity from impatient retail sellers who think gold is about to crash. But the truth is gold doesn't crash without catalyst. It only retraces, reloads, and continues following the dominant macro trend, which right now is still favoring upside pressure in the medium term. However, today's live session adds another twist. Volume spikes are happening at very specific hours, meaning institutional traders are making adjustments, probably positioning for upcoming fundamental news that could violently shake both USD and commodities. And gold always reacts first because it is the fastest safe haven instrument to respond. Watch how the candles behave whenever the market pauses. Each pause is not random. Each pause is liquidity building. Each pause is the market setting up the next wave. And if you look carefully, today's liquidity is stacking above and below current price, meaning the market is compressing like a spring ready to explode in either direction. But the likelihood leans slightly bullish because the sell volume is fading and buy volume is rising at the bottom of each wick, giving early signals of accumulation. Still, nothing happens in gold without liquidation first, so expect a fake out, maybe even a quick dip below intraday support to grab stops before the real move begins. And that's why today's sesio yen requires patience, discipline, and clarity because emotional traders will get trapped instantly. The 4 hours chart adds even more confirmation because price is forming a bullish continuation curve, consolidating above the 50-period moving line, which historically always aligns with massive upside explosions whenever the curve holds for more than 3 sessions. And that is exactly what we are seeing right now. So the signal is strong, but the timing must be perfect. Gold is breathing, collecting energy, removing weak hands, and preparing for expansion. But remember, expansions never come without chaos first, so check volume. If it spikes without directional movement, it means volatility is loading and the breakout is near. If it spikes during a breakout candle, confirmation is locked and the move will continue. If it spikes during a fake out, you stay calm because smart money is manipulating liquidity. This is how gold behaves, and this is how professionals read it. Today's session is literally showing the textbook example of compression to expansion behavior. And if you pay attention to the micro wicks on the 5 millions chart, they are all pointing upward as buyers keep absorbing sell side pressure, refusing to let price fall below the consolidation floor. And that is not retail power. That is institutional presence building the move quietly. Now zoom out again to the daily chart and everything becomes clearer. Gold remains in a long-term bullish channel, still respecting higher high and higher low structure, still being driven by global uncertainty, inflation expectations, interest rate hesitation, and risk-off sentiment whenever markets get nervous. And today is one of those nervous days. The global market is on edge. Oil is fluctuating. Bonds are pulling back. Dollar is undecided. And when everything is unclear, gold becomes the clearest chart of all because it reflects fear. And today that fear is rising. So as we watch gold dance between micro levels, the message is simple: accumulation, hesitation, then breakout. The only question is timing. And that timing is what this session is slowly revealing as candlestick behavior becomes tighter, wicks become shorter, reactions become faster, and compression becomes stronger, showing that gold is preparing the next major expansion leg. And when it comes, it will not be small, it will not be calm, it will not be slow. It will be violent, decisive, and directional, exactly how gold always behaves after a session like this. So traders watching right now need to stay sharp, follow structure, respect liquidity, and anticipate the breakout with strategy, not emotion, because gold is giving signals, and those signals today are louder than ever. Gold. Traders watching the chart right now need to understand that today's market isn't just moving, it's communicating. And every candle, every wick, every tiny micro reaction is telling a bigger story about where XAU USD wants to go next. Because this market is sitting at a crossroads where fear, demand, and liquidity all collide. And that collision always produces violent moves. So this is the moment where smart traders stay hyper focused because gold is flashing signals that the next breakout phase could be closer than most realize. When you zoom into the price action, the first thing you notice is the tightening volatility. Candles are getting smaller, wicks are getting sharper, reactions are becoming instant. And this type of compression is never accidental. It's always a sign that the market is quietly loading a massive move. And what makes today's live session even more interesting is that gold keeps rejecting the downside, showing that sellers are trying but failing to break structure, meaning buyers are still in control even when momentum temporarily appears neutral. And this is the real clue that many traders miss, because sideways movement in gold is never truly sideways. It's directional energy being stored, it's pressure being contained, it's liquidity being accumulated. And right now, that energy is leaning upward. The demand zone that held earlier continues to hold like concrete, which tells us that smart money has no intention of letting the price collapse. And if they had any bearish ambition, we would have seen a deeper breakdown already, but we haven't, because the market is protecting that level for a reason. And when institutions protect a zone, it means they're building positions beneath the surface, positioning themselves for the bigger move to come. Meanwhile, on the 1-hour chart, gold is forming a beautiful bullish squeeze pattern, a formation where candles push against resistance slowly and steadily until that resistance becomes fragile. And once it becomes fragile, all it takes is one high volume candle to explode through it, trapping all late sellers and creating a momentum burst that takes gold into the next major zone instantly. And that exact setup is forming right now. The more you analyze the market today, the more you realize how perfectly everything is aligning. The dollar index is still hesitant, flipping between micro bullish and micro bearish swings without commitment. And gold loves this type of uncertainty because the moment the dollar shows weakness for even a few minutes, gold pumps aggressively, proving that the bullish pressure is still alive and waiting. Meanwhile, fundamentals remain supportive because the global market is still dealing with inflation nerves, rate cut speculation, geopolitical instability, and institutional hedging, all of which are classic drivers for gold upside, and they all remain active today, which is why gold refuses to break down despite multiple intraday retests from sellers. Every attempt to push the market lower only creates more buy absorption, which is why the wicks keep appearing on the downside. Those wicks are not random. They are footprints of buyers entering positions, defending levels, and building strength. And when footprints like these appear consistently, it means the market is preparing a bigger story. The 4 hours market structure remains clean and bullish, with gold staying above the trend line support that has guided price for multiple sessions. And every time gold respects that trend line, it resets momentum and launches into the next phase. And today that setup is once again repeating itself, meaning the next expansion leg could be imminent. But before any breakout happens, gold always plays one final trick. Gold loves shaking out weak hands, and today you should expect one last fake move, maybe a quick dip into the liquidity pocket before the reversal takes control, because gold never moves cleanly when large players are positioning, and today large players are very active, which is why volume spikes appear even in the smallest time frames. Every spike is liquidity harvesting, every harvest is preparation, every preparation leads to the breakout, and the breakout will not be slow, because once gold gets momentum, it becomes one of the most aggressive pairs in the market, slicing through zones like paper and forcing traders to chase the move after missing the initial entry. Now, look carefully at the 30M chart. Notice how ICE is forming a staircase pattern where each small drop is followed by a quick recovery, and each recovery climbs slightly higher than the last one, which is the clearest sign of stealth bullish pressure, the type of pressure that builds quietly until the breakout candle unlocks all the hidden momentum. And that candle is coming soon because gold doesn't stay compressed for long. Not when volatility is this elevated, not when fundamentals support upward movement, and not when technicals are screaming accumulation. Today's session is a mechanical picture of bullish tension, the kind of tension that leads to explosive movement, and the market keeps giving hints the correlation with USD is weakening. The reaction to economic headlines is becoming muted, and price is gravitating repeatedly toward resistance instead of running from it. And when price gravitates toward a level rather than dropping away, it's because the market wants that level to break. Even the daily chart confirms this. Gold is still printing higher lows, still respecting its demand zones, still holding above major EMAs, and still carrying heavy inflows from risk-off investors who are quietly shifting capital into safer assets as global uncertainty rises. These inflows don't move the market immediately, but they create a foundation that strengthens every bullish push, and that foundation is visible in today's reaction points. The more you watch the chart, the more obvious it becomes that gold is preparing a directional move, and the energy is too concentrated, too compressed, too controlled for it to be a sell-off. This is classic bullish preparation, and when the expansion candle hits, the market will shift from slow to violent in a single heartbeat, leaving only prepared traders position and everyone LSE scrambling to make sense of the volatility. So stay sharp, understand the story the market is telling, respect the levels, anticipate the breakout, and let the structure guide you, because gold today is not random, not noisy, not confusing. It is clear, calculated, and ready for its next major phase.